Most people believe their financial future is shaped by big decisions, dramatic moments, or sudden changes. But the truth is quieter, slower, and far more uncomfortable than most expect. The habit that damages the future rarely feels dangerous in the moment. It hides inside daily routines, normal choices, and behaviors that feel justified, reasonable, and even responsible at first. This habit does not announce itself with crisis, failure, or visible loss. It grows slowly, protected by comfort and familiarity. Because it feels small, it is ignored. Because it feels common, it is accepted. Over time, it becomes part of identity, making its consequences harder to recognize, harder to question, and harder to reverse. The habit is postponing awareness. It is choosing not to look closely, not to question patterns, and not to reflect on direction. This avoidance feels harmless because nothing bad happens immediately. Life continues, bills get paid, routines stay intact. Yet quietly, this habit removes control from future decisions, one unnoticed choice at a time. Many people delay financial awareness because life feels busy and demanding. Work, responsibilities, and expectations leave little mental space. They tell themselves there will be time later to review, plan, or adjust. Later becomes a comforting promise that reduces discomfort today, even though it increases uncertainty tomorrow. When awareness is delayed, habits operate on autopilot. Spending adapts to emotion. Income adjusts to lifestyle. Financial decisions become reactions instead of choices. Without awareness, repetition replaces intention, and repetition shapes outcomes more powerfully than effort ever could. This habit feels safe because it avoids discomfort. Looking closely at money forces honesty, and honesty can be uncomfortable. It brings clarity, but also responsibility. Avoidance offers temporary relief, even though it removes long-term confidence, direction, and peace of mind. Over time, postponed awareness trains the mind to normalize uncertainty. When uncertainty becomes familiar, it stops feeling urgent. This is dangerous because financial security depends on clarity, not optimism, luck, or hope. Hope without clarity feels positive, but it offers no protection. Many people assume future income or opportunity will compensate for current avoidance. This belief creates false confidence. Growth without awareness often increases pressure instead of stability, because habits expand alongside resources rather than being corrected by them. This habit also affects emotional regulation. When people do not understand their financial position, stress feels constant but undefined. Undefined stress drains energy, patience, and focus. Over time, it reduces the ability to think clearly, making thoughtful decisions harder and reactive choices more likely. Delayed awareness turns small issues into structural ones. What could have been adjusted early becomes heavier later, not because change is impossible, but because accumulation makes everything feel overwhelming when finally confronted. This habit is reinforced socially. Many environments avoid open conversations about money. Silence creates the illusion that uncertainty is normal and unavoidable. When everyone avoids the topic, avoidance feels justified, and motivation to confront reality quietly disappears. Avoidance is often mistaken for peace. Not thinking about money feels calm in the moment. But true peace comes from understanding, not ignoring. Ignorance creates quiet anxiety that never fully disappears, even during stable periods. Financial habits operate quietly, but their results are loud later in life. By the time consequences appear, options feel limited, flexibility feels reduced, and regret feels heavier than action ever would have. Postponing awareness also delays learning. Without reflection, mistakes repeat. Repetition without learning creates patterns that feel permanent, even when change is still possible. Many people believe discipline alone solves financial problems. Discipline without awareness is fragile. Awareness gives discipline direction, context, and meaning. Without it, discipline eventually breaks under pressure. This habit often begins early. Small decisions are ignored because stakes feel low. Over time, stakes rise, but behavior remains unchanged. The habit grows stronger as responsibility increases, quietly shaping the future. Avoidance reduces confidence. When people do not know where they stand, they cannot trust themselves fully. Lack of trust fuels insecurity, regardless of income, effort, or external success. Awareness is not about judgment, it is about information. Without information, planning becomes guesswork, and guesswork increases fear instead of reducing it. This habit also affects long-term thinking. When people avoid reviewing their situation, they focus on short-term comfort. Short-term focus weakens future resilience and makes long-term goals feel distant or abstract. Postponed awareness turns financial life into a series of reactions. Reactions feel urgent, emotional, and exhausting. Proactive decisions feel calmer, clearer, and more empowering. The danger of this habit lies in its invisibility. There is no single moment when everything breaks. Instead, there is a gradual loss of flexibility, confidence, and choice. Many people wait for motivation to face their finances. Motivation usually follows clarity, not the other way around. Waiting delays progress unnecessarily and reinforces avoidance. Awareness does not require perfection. It requires presence. Small, regular attention builds understanding and reduces fear over time. When people begin to look honestly at patterns, anxiety often decreases. Clarity replaces imagination, and imagination is often more frightening than reality. This habit survives because it feels normal. But normal does not mean healthy. Normal often reflects collective avoidance rather than collective wisdom. Financial habits shape identity. Avoidance reinforces the belief that money is stressful and confusing, making engagement feel threatening instead of empowering. Breaking this habit does not require drastic change. It requires consistent attention. Attention transforms uncertainty into manageable steps. When awareness increases, decisions feel lighter, not because problems disappear, but because direction becomes visible. Delayed awareness steals choice. Awareness restores it. Choice is the foundation of financial confidence. This habit quietly destroys the future by removing intention from the present. Without intention, progress becomes accidental. The future is not damaged by lack of opportunity alone, but by lack of clarity today. Awareness builds trust. Trust builds calm. Calm supports better decisions. Ignoring finances does not remove responsibility, it only postpones it. Facing reality early reduces pressure later. The most powerful financial habit is awareness, practiced consistently and without judgment. If this reflection helped you see your financial habits more clearly, consider liking the video and subscribing for more thoughtful discussions that support long-term financial confidence. This is very important.